Hi everybody, it's Christian from Student Education. Just going to be giving you the Forex Majors Analysis Update for the 24th to the 29th of May 2015, last week of May 2015. Let's have a look and see how this prior week has happened and what we can expect for the last week of May. So let's start with the euro against US dollar on the monthly. Let's have a look and see what's been happening. Just to give you an outlook of what's happened on May, you can see some upside. We clearly do have a major support and resistance level at the current level, roughly around the 11259 and change. So just going to be putting on some fib lines, etc., just to give us an idea of what's happened for price over the last couple of years. You can see straight away, draw monthly fib level on here. You can see that the 61.8 level pretty much coincides where price has been quite hesitant. We saw January into this level, February hesitation, breakout in March. However, we failed to see a continuation through April on the March low towards the level here at 76.4. We saw currently April moving high again, back into that 61.8 level on the monthly fib. However, saying that, nice tweezer bottom, has failed to see any upside on this bullish confirmation candle here, because price is still trading at a major monthly support and resistance level. So here, this level here at the 120 and change, that's a vital area of consolidation. So when we drop down to our weekly now, you can see that price has been quite hesitant around this level over the past week or so. Last week, in fact, we saw a nice bearish engulfing candle on the prior week's data, breaking higher than 61.8. So looking for trading opportunities 2 weeks ago, we should and would have wanted to see a daily candle close higher last week to concur with that there was still further genuine upside after 5 weeks of positiveness. That failed to materialize, as we failed to see a daily candle close higher with true upside sentiment last week, and subsequently what we saw was negativity through the entire week last week, which took price, not only saw price falling back, but back below a major support and resistance level, which is the 61.8 level here at 112071 and change. So the overall bias, we've seen some consolidation recently over the 2 months, predominantly as we saw negative US data coming out. That started very much so from April, after we saw those shocking non-farm payroll figures. And April, we failed to see any lows below the March lows here at the 1046, which then saw price moving higher. What we're seeing now is a return of negative liquidity back into the favor of euro against US dollar, and you can see that the overall bias for euro against US dollar is one of negativity. The candlesticks are still red. Yes, we've had a pullback, but the overall bias for this was that we just saw a major consolidation in what is still a negative trend. So this week, the last week of May, what we're looking for is for a continuation of the negativity that we saw last week on that bearish engulfing candle. So this week, when we drop down to the daily, is to see price trading lower than last week's low, i.e. Friday's low. And ultimately what's going to be happening is we're going to be looking towards the March low, which was this level down here, which is around the 1469 and changes as our target for the last week of May going into June. So I've applied a pivot level on here, the monthly pivot levels, and you could see that on the daily we saw a lot of negativity through Monday, Tuesday, Wednesday, Thursday, Friday last week, a lot of selling for euro, and that's now headed into the monthly pivot level. So you can see the reason why we need to see a continuation of last week's negativity. You can see the monthly pivot is still below price. The candlesticks on the daily have turned blue, so we have, however, we have a red arrow. Okay, there again, I think it was back on Wednesday. In fact, we've got a red arrow. The candlesticks were still blue. The RMO is still above, and the SMA is bright red. So we don't have a true confluence here with the actual the template requirements on the daily. Having said that, we have a break of the intermediate trend of the consolidation, so up over the last couple of weeks, in fact the last month or so. However, we've seen a break of that on the Tuesday close. So now what we need is to see a continuation, and that continuation is a break lower than this monthly pivot level, and then we could target towards that monthly S1 level here at 1073, and ultimately back down towards the S2, which is down here at 1225 and change, which is lower than the March lows that we've seen of 2015. So vitally important. Got to see a daily candle close lower than this 109982 and change to see a continuation to at least the 1073 level for this week. Moving on to sterling. Here again, just looking at the monthly, just have a look and see what price has done. We saw hesitation on the market, as with the same as the euro US dollar cross. We saw a lot of negativity in March, taking us lower than the January and February lows. Subsequently saying that, we failed to see price continue with that sentiment through April. And what's happened is we've seen price now bouncing higher and subsequently closing higher on above the monthly pivot level at 23.6 at the 1528 and change level. So you can see clearly back in the latter part, well, most of 2013, in fact, a very strong support level through here, consolidation level. Prices consolidated yet again at the same level. And when we drop down to the daily time frame, you can see that similar to its European counterpart, the euro against US dollar, we've seen upside movement for sterling, and that's predominantly because of the weak US data we got through most of April. So the April lows, 146, 152, we failed to see price trading lower than those April lows, and subsequently what we saw was price consolidating, and then eventually what we had was this bullish engulfing candle, which engulfed the 1, 2, 3, 4 prior weeks of hesitation, which then put more bias or emphasis on bullish sentiment. And what we could have done is targeted back towards the 20 period moving average, and subsequently back towards the 23.6 monthly fib level. And when we got back above here 2 weeks ago, then target aggressively back towards the 50 period, which is the institution moving average on this time frame. Just applied the pivot levels of my monthly pivots. You can see that the monthly pivot is still below price, so that's a positive signal. As long as price trades above the monthly pivot, then we should see further continuations to the upside, or bullish sentiment to the upside. You'll notice that the long-term trend, which was the June highs to the current lows in 2015, this has been breached recently, 1, 2, 3, 4 consecutive weeks, going into the 5th consecutive week, so almost a month and a bit of price trading higher. What we haven't seen is price being able to close above the monthly R1 level, which happens to be price support and resistance. So that would have been a genuine target over the last couple of weeks, to target the monthly pivot level. And subsequently, what's going to happen is the end of this week, or the end of May, these monthly pivot levels are going to be recalculated, part of the algorithm, and they will spit out new targets, the monthly pivots, etc. So what we're looking for further bullish sentiment for this particular pair, we would need to see a break and close higher than the monthly R1 level to then target the monthly R2, etc. to the upside. Failure seeing that would then put further negativity on sterling, and what we would see then is a reattempt of the monthly pivot, but then back towards the monthly, the fib level, then back to the monthly pivot level down here at 151 and change. So we saw a bearish candle close for last week. It didn't close lower than the prior week's low. And what we want to see now is if that's to be a genuine negativity, then what we want to see is back to see price on the daily closing lower than the institution moving average, which would put more negative sentiment on price action. So you can see recently we've had a swing high, swing high, swing high, and you can see price now is consolidating at this next swing high. It's failed to make any new highs. Okay, it's swung, consolidated is another word you could probably use here. It's failed to break the monthly R1 level, and it's failed to continue on the Thursday. Okay, remember this is last week's trading. Monday, Tuesday, Wednesday, Thursday, Friday. Friday's candle bearish engulfing Thursday and Wednesday's candles. However, saying that, not really closing low, predominantly because of the institution moving average below price supporting us. So if we are to see negativity, which came into effect through Friday and closed out, which saw no new highs over the last week, then what we need to see is the institution moving average being breached and price to close lower, and then ultimately what we can do is target the downside. There's a lot of data out this week for sterling. We have got GDP quarter-on-quarter figures for Friday announcement, if I'm not mistaken, so just be aware there is some news out for sterling this week, and that will have an impact on price action as we go forward. Moving on to the US dollar Swiss franc. Here we go. You can see this is the monthly pivots, monthly time frame with the monthly fib levels on here. You can see a major support and resistance level where prices hesitated since 2008 right through to the 2010 breakout. Then on the pullback, we've seen 2012, 2013, 2014, 2015 acting as clear resistance. So clearly, the US dollar is finding this level here, the 23.6 at 9732 and change, as a very strong support and resistance level. Going into 2015, a major resistance level. We saw the January break low. However, we've seen the US dollar rally higher, but failing to really muster any true momentum to the upside. And subsequently, what price has done has been trading within a very negative or a very indecisive range where price is trading in 2015. Just plotting the monthly pivot levels on here, you can see that because price has been trading in a very tight range over the years, you'll notice that the monthly pivots will then be plotted very, very small, tight themselves. So you can see over here, if I just pan in, you can see the monthly pivot level is still above price, which is a negative sign. We should have been looking for selling, especially through last week, in fact. The last couple of weeks going into, if you want to look at it on the monthly, we should have been looking for negative sentiment for May, in fact. And we have seen that to a degree. We saw price heading on the low of April lows, heading back towards the January and February lows here at the monthly S1 level, subsequently failing to close lower to see recontinuation. In fact, we've seen the US dollar edge higher as the month of May has progressed, and now we're seeing a lot of bias or bullish bias in price action, the candlestick itself, as it hugs the upper range of the overall range of this month's trading. So dropping down to the weekly, you'll notice that price is consolidated. There happens to be the institution, both of the 20, the 50, and the institution. All the moving averages are pretty much coming together now, and that's a clear sign that we're seeing consolidation. Moving averages we use for trend indicating, and if those moving averages are flat, then we should be seeing consolidation, and that's purely what we're seeing at the moment. So as it stands at the moment now, we saw the week last week closing higher, so some bullish bias coming through for the US dollar against the Swiss franc, and engulfing the prior two negative candles. All this is happening at the institution moving average. You can see the indicator box. There's predominantly more positive in this on here, but the R-squared is not really complementing the time frames that we really needed to do so. So weekly, daily, and 4 hour, the R-squared is not really there, so we're not seeing any genuine sentiment at the moment. So what can we expect going into the last week of May? So we saw a bullish engulfing candle last week. That's taken us back into this price support and resistance level that we saw not too long ago. So this is still trading into the monthly pivot level. So if we are to see any positiveness for the US dollar Swiss franc, we would need to see price trading above the monthly pivot. So when we drop down to the daily now, you can see that the institution moving average is above price. So you can see price trading within a consolidative range. Price prior monthly pivots or above the institution support. Now we're below it and at the underside. So there's more negativity on the US dollar Swiss franc at the moment. Yes, we've seen bias through last week, in fact, where we saw positiveness coming back into the US market. However, we're still trading below the monthly pivot. So therefore, there's going to take a lot of momentum, positive momentum, to break the sentiment up. And you can see that price has been making swing lows recently over the last, what we're looking at, February, March, April. So the last couple of months, we've seen negativity on the US dollar. So here it's got to do a lot of bullish bias. The US dollar is going to come up with some really fantastic figures in order to push price higher. So at the moment now, there's more of a negative bias on price as long as she trades below the monthly pivot. So here again, just look at the data to see if there's anything out there that could really come into play this week. We have, just looking right now, we have GDP quarter-on-quarter figures this Friday coming. We have pending home sales figures. So what we're looking for is to see if there's any other negative data that could come out that could pose a risk on the US dollar strength that we've seen over the past week or so, to come in and to really undermine the bias that we've seen over the past, over May, in fact. So what we want to see now is a true direction. We are trading at the underside of that. Look to see if there's any movement this week that's going to give us a clear continuation of the negative bias we've seen over the last couple of months, or a new change in the US dollar Swiss franc change going forward into June. Last pair of the day, US dollar Japanese yen. Let's have a look at this particular pair. This particular pair has been very consolidated. On the monthly, you can see we've seen 1, 2, 3, 4, 5 consecutive months of resistance now in what was very strong US strength over the years. In fact, the last 2 years, in fact, we've seen a lot of positiveness for the US dollar coming in after all that quantitative easing has done fantastically well for the US dollar. However, saying that, going into the end of 2014, we saw a slowdown, and most of 2015, we've seen price action consolidating around the 61.8 level here at 120.40 and change. So what we want to see, and you can see the last week we had a January's candle, which was a negative candle. February we saw a reattempt of the January highs, which failed to close higher. Then we went into March. We saw prices trading higher for some of that month, however, closing lower and indecisive at the end of it. Then going into April, we saw a recontinuation, a smaller range and further indecision, and price failing to close higher. The overall bias is US dollar strength because prices failed to drop lower. You can expect when price is trading into a major level of resistance, in this case, you expect price to pull back. And then a reattempt of the bulls are still looking for further positive upside. But the longer price fails to break that resistance, you're seeing less and less bullish sentiment going into it, because people are now aware that we've now spent a lot of energy, but we've not gone anywhere over the last couple of months. So what happens is less buyers come into the market and further sellers come in. But the overall bias is still positive because the candlesticks on the actual indicator are telling us we should be looking for further upside. The indicator box down here, predominantly red, which is a good clear sign. You can see this month as it stands out now, May, we're seeing positiveness, or US dollar positiveness, coming back into the market again, and it is trading higher. So at the end of this week, we want to see price or the candlestick closing higher to give us a bullish bias. And we do need to see a bull candle close on the monthly, because we haven't seen one on the monthly yet over the last 5 months, to close higher to tell us we're seeing a continuation of what is US dollar strength on the yen over the last couple of years. So vitally important this week. There we go. You can see a nice bullish candle close higher. However, saying that, it's not been able to close higher than the November-December high, not close higher than the March high, and that's what we what we really need at the moment now is that to take place. So this week on the US dollar Japanese yen, need to see a daily candle close higher with genuine sentiment to see a continuation of the long-term bias. So just gone ahead and plotted my monthly pivot levels on here, and you can see clearly that the monthly pivot is below price. You can see that the monthly R1 has been a target for price over this month, in fact, or last week, and you can see the monthly R2 level is the current support and resistance level that we're currently seeing. So straight away I get a buy signal on that. There we go, just drop down to the daily just to concur that. Monthly pivot, bull sentiment, trading above the monthly R1 and heading into the monthly R2, which is our long-term support and resistance level. Got to see price trading or closing higher than that to then see price heading towards the monthly R3, which is above, and you could look in excess of 115 pips between those 2 points. There's lots over there for money to be made off, but we've got to see a clear continuation of what price has been doing recently on this particular pair. If I just pan out here, is in a very tight range. So very, very important. We've got to see new highs being created. When we get new highs, especially on the monthly, in this case for this particular pair, then we're likely to see a lot of bullish sentiment coming back into the market for the US dollar Japanese yen, and then we'll get a true continuation of the long-term bias on this particular pair. So yeah, this week look for US dollar strength or Japanese weakness to then play out price action on this particular pair going forward. That's it, guys, short and sweet. Last week of May, so there is a lot of data, so please do your due diligence. Once you've done all your analysis on your charts, just back it up to see if there's any fundamental data out there that could actually hinder price action. Very, very important. You don't want to be trading price just by looking at charts. Look and see if there's any fundamental data there, underlying data that could actually come in or push price in your for the pairs that you're looking to trade. And then all you do is you back it up with sound money management rules. Very important. You can have the best template out there, but if you don't have the right money management rules attached, you're not going to be a successful trader. So vitally important. Back up any trading you might have with genuine, vitally important the money management side of things to really, really get the most out of your trading. I'm going to leave you with that. Hope you have a fantastic last week of May. Tomorrow, Monday, bank holiday for most countries out there, so it's effectively going to be a four-day trading week. However, the markets are still open for other countries, so there might be a bit of liquidity out there. Just be aware of that. I'm going to leave you with that. Hope you have a fantastic week. Until then, you guys trade serenely.